That you're seeing?
Absolutely. So I would say from, let's say, FTX November 22 to the bulk of this year, it was kind of just a frozen landscape. No one really wanted to move any initiative or digital asset or blockchain related pioneer or flag bearer within an organization didn't have a lot of ground to stand on. It was constant negative headlines, pressure from their bosses. Why are we getting into this? It's a waste of time. It's going to be banned. All these types of negativities, and all of a sudden that thing starts, that those headwinds really start to shift, and I think they're becoming tailwinds headed into the election next year, which is, okay, the SEC loses against Ripple. Okay, next up, 3-0, resounding rebuttal by the district court in their assessment of the Grayscale case, and then you start to see these kind of losses for the SEC pile up, and if you're talking about people's careers, political aspirations, and no one likes to lose, whether you work at the SEC or you work at a plumbing job, you don't want to lose, and so you got to start kind of reading the tea leaves and seeing that you are going probably too heavily against the industry. People are starting to, that didn't even have a dog in the fight, are starting to speak out. You're seeing congressmen, senators, congressmen and women senators supporting and kind of questioning, why are you doing this? What's the reasoning behind it? Because it wasn't making a lot of sense. And
Right.
and I think that's changing. And so for the SEC, they make decisions as a group. There's a board and committees. I think they're looking at it, and from just like a nuts and bolts political angle, like you can't can't keep going at it with
Right.
no good logic, and so those things do matter for sure.
Okay, and you talked about the change of the headwinds and institutions it becoming more palatable for them. I want to play you a clip of Tom Lee that was very recent and ask you a couple things. Let's play that real quick.
You still a Bitcoin bull?
Yes.
I want to end our conversation on that because I think it's the best performing asset class of the year.
Yeah.
Certainly one of them. It's up more than 100%. So what's your view of it here? And why has it been going up the way it has been recently?
Well, there's a couple things. One is it's been real buying. So there's real money institutional buying. We can see it in the CME volumes at all-time highs. And we know Asia has been buying again, and they've been absent. So this is true people wanting to get in. It's been a good sound money story, especially as we worry about Washington.
ETF optimism too? Is that where you're going to go also?
Yeah, the ETF I think is far bigger than people realize because, again, supply is going to be only 12 million a day after the halving. ETF could be $100 million a day of demand.
Okay, now Tom's always known as a pretty big bull, but I got to first ask you because you're on the institutional side, you are seeing more interest or money flow into the asset class.
Yeah, that's right. I mean, just as the last week's price action will tell you, the proof is in those numbers. I think people are starting to wake up first, and just to see how imminent this ETF is. And obviously there's an element of quote unquote front running those flows that they expect to ultimately come into the assets with the ETF. But it's no doubt driving, eyeballs on the industry as people are starting to see these players step in.
I mean, 100 million a day seems kind of high, quite honestly. And I know when he talks about 12 million a day, when you look at the halving, it's going to go to 450 Bitcoins a day. That's around 13 million. But I do believe, though, that people have underestimated the demand that's going to come in. But again, that's just me. I've been wrong many, many times. So I want to get a professional's opinion on that. Do you believe that this is, it's all priced in and sell the news as soon as there's an ETF granted, or do you think there's more room after that?
There's definitely a very, very large addressable market. I got to give a shout out to my good friend Grant Close, who's at Galaxy Asset Management and really spearheading their sales efforts with Invesco across the country on this Bitcoin ETF and their other exchange traded products. But he's been the boots on the ground guy, and Galaxy just put out a really solid report, kind of diving into what they expect on these types of numbers, and they estimate 50 trillion in AUM that fall under broker dealers, banks, and RIAs that are managed by third parties. And so, even if you're assigning pretty conservative estimates, say 10% of investors, 10% of total investors access Bitcoin at all, and then just 1% of those portfolios get allocated, the numbers are in the tens of billions. And this is an asset with 700 billion today. So it's no doubt very, very significant. People estimate anywhere between 5 to 10 times the inflows into the asset class as the total effect on the market cap. And so you're kind of seeing maybe 50 to 100%, upward price impact from these eventual flows. What I will say is, 100 million a day, you do see some large numbers, and what happens day one versus what happens day 360, I think are very different things. So the tried and true in crypto is people get over their skis and a bit too excited. So it very well could be a sell the news in the short term, where everybody tries to front run because they're expecting $5 billion on day one to flow into the ETFs. Well, in that case, the reality is there's not probably $5 billion of people sitting there ready to click the mouse just because the ETF,
Right.
today you still need these catalysts. And what I think it comes down to is the passive drift over time, where, okay, the ETFs launch a month later, UBS starts supporting the ETF on their platform for all of their wealth managers. The next month it's Credit Suisse, the next month Morgan Stanley. And over time, you start to make the case, okay, this is some serious dollars. And I do think it's going to be in that 10 to $15 billion annually. And why that's significant: today, Bitcoin's annual inflation rate is about 1.74%. And that's about $12 billion of total inflation supply on an annual basis. In April of next year, that cuts in half with the halvening, and that's $6 billion at today's prices, assuming it's today's levels of annual supply. I would, bet pretty heavily that over the first 1 to 2 years, the inflows into the Bitcoin ETF will be greater than $6 billion on an annual basis. And if you're offsetting all of the supply inflation, that's pretty tremendous for the size of the asset class.
That's a great point. I was, and you brought up some great points about it was a new asset class. Over in the grand scheme of things, it's not that large of an asset class. And I look at it when the Black Rocks, and why I think it's understated, when the Black Rocks and the Larry Finks of the world, get approval, then what you have is you have the financial advisor who's just, to regular people, go from stay away from that crypto to, what, there's nothing wrong with 1 to 5%. Because I think we're at a point now, if you're a financial advisor, it could be argued that you're being negligent, professionally negligent, if you don't have some minimum exposure to, certainly when an ETF is approved. And so that's what I was getting at. So listen, last thing, I know I've taken time. The last thing I want to ask you is what no one likes to do, and that's the prediction business, right? Because we're talking crypto, we have to talk a little speculation, no doubt. And that is two things. Are we going to get an ETF approval? And do you think, I've seen reports of 70% by the end of this year, and what's your position on timing? And I know that, we're guessing, but you have a much better educated guess than me.
Yeah, so as you've pointed out, I also agree the market is underestimating this, and that you can look at the pricing of the Bitcoin Grayscale Trust as an example, where the discount still is about 15 to 20% below the net asset value of that vehicle. And assuming the Bitcoin ETF gets approved, that should close to zero and represent a pretty good gain. I think personally, the latest that the ETF comes is early to mid January, when that ARK ETF and 21 shares ETF filing last deadline is. Because if the SEC denies that, given it's the last deadline, they will have to come up with a lot of a new reason, which they've kind of gotten shut down on a number of times at this point, to push that out. And there's so many signs at this point that the momentum is very clear. There's comments given to the S1s, amendments to those S1s, and looking from S1 to S1, it's small changes within the risk disclosures and details around the tickers and the settlement. And it's not very large. When a company goes public, the IPO, and they get their S1 back and it's marked up and it's just nothing but red that says, you know, you can't operate here. That's a bad sign. But here, these are very, very minor nits. And so I think, early Jan at the latest. I think they do an all at once start, similar to how they did the futures ETF. I don't think they're trying to pick and choose winners. That's not the point or job of the SEC. And I do actually assign much higher chances than your average person to a 2023 launch, just given you go into the holiday season, there's just less working days, potential government shutdown in November. People want to get ahead of these things. And then when you come back in January, there's really only about 5 to 7 business days of working time before that deadline. And you just get to the mechanics of it. You don't leave your biggest priorities to when you're coming back in the office after a week of vacation in January and have forgotten everything. So I think it's coming very, very soon, under 2 months probably. And the market will start to realize that, I think, as they have been. But one thing I just leave with is, as we've talked about this conduit and access point, is day one, people might be having unrealistic expectations of what it brings in. But when there are these catalysts like a banking crisis in March, or a massive market meltdown, or the US Treasury issuing trillions more in debt than they can afford to, there's specific events that cause 0 to 1 moments, let's call them, in adoption and uptick. And I just kind of post to people is, imagine if there was a Bitcoin spot ETF in March of this year, when the Bitcoin price and gold, everything rallied when the banks started to go down, but there wasn't this traditional vehicle to access, and Bitcoin was still up significantly. So I think those types of events are really what you might be trickling along, and $10-20 million of inflows a day. Something like that happens, where there's a crisis within the financial system, and you might get $1 billion day pretty easily. So there's going to be events like that really wake people up over the next year, I think, and it's good for the industry.
No, it is. And I think we're at that critical point in time where a lot of people are now arguing that Bitcoin is not is becoming uncorrelated and not correlated with the NASDAQ and with stocks, and certainly a banking crisis. We will never see one of those again, I'm sure, Quinn.
Those are one and done type of things. Yeah, you put a good point on it. It's funny talking to people within the industry arguing over, like, oh, you're way too excited. The Bitcoin ETF isn't going to do anything. It's only going to be 5 billion of flows. It's not going to be 20. And it's like, well, a year ago, just to even have the idea of an ETF being launched within 2 months would have been like, people would have been going crazy for it. And so it just gives you a sign of the times, where you should be selling greed and buying fear. And it doesn't feel like we're structurally, I'm not talking near term, what's going to happen to the Bitcoin price in 1 or 2 days, but medium term, it doesn't feel like we're in a very greedy position yet relative to historical times for the asset.
Oh, well, listen, man, it's been great, educational. Thank you. Listen, you guys are building during this market. I can see that smile that is forming, because I think that you have reason to be bullish as we move forward. And so thank you so much. I look forward to having you on again sometime. Okay.
Absolutely, John. Take care. Appreciate you having me.
Thank you, man. That's it. See you next week, everybody.